These are 8 top big cap stocks with large percentage gains today. While watching bullish price actions, let us inform you our review on GRRR. Gorilla Technology Group Incorporated just delivered a financial performance that turned heads, and Wall Street is taking notice. The company, a leader in AI-driven security and intelligence solutions, not only exceeded expectations but crushed them. Revenue for 2024 came in at $74.67 million, beating analyst projections, and earnings per share (EPS) soared to $2.02, a staggering beat compared to a single analyst estimate of just 35 cents. That kind of outperformance doesn't happen every day, and investors are clearly impressed, sending the stock up 18% today. So what's driving this surge? Gorilla has been executing with precision, focusing on strategic expansion, high-value contracts, and tight operational efficiency. CEO Jay Chandan made it clear that this isn't just a one-off win. This is Gorilla proving it's here to dominate. The company has built a scalable business model that's allowing it to drive strong revenue growth while improving profitability. Gorilla's ability to expand its global footprint while keeping costs in check is setting it apart in the increasingly competitive AI security space. Beyond the numbers, Gorilla is positioning itself as a major force in AI-powered security, intelligence, and digital transformation. The company has been landing key contracts that not only bring in revenue, but also validate its technology and market leadership. With an expanding pipeline of projects, Gorilla is pushing forward into 2025 with serious momentum. Financially, the company is in a much stronger position than before. Cash reserves are up, debt is down, and its shareholder structure has been streamlined, setting the foundation for the next phase of growth. Investors love a company that beats expectations, but they love it even more when that company has a clear path for continued success. Gorilla isn't just growing, it's accelerating. And with the AI security space heating up, this is a name that's quickly becoming hard to ignore. Our review on WOLF. Wolfspeed Incorporated is on a roller coaster ride that investors won't forget anytime soon. After getting absolutely hammered with a brutal 59% drop on March 28th, the stock is showing signs of life, bouncing back 18% today. It's the kind of extreme volatility that makes traders pay attention and raises a lot of questions about what's next. The company, known for its silicon carbide technology that powers everything from EVs to renewable energy systems, took that massive hit after delivering a rough earnings update. Concerns over cash burn, delayed capacity expansion, and market demand sent investors running for the exits. But now, with today's rebound, it looks like some bargain hunters and long-term believers are stepping in, seeing the dip as overdone. Wolfspeed's core business is still built on a technology that's crucial for the future of energy efficiency and electrification. The silicon carbide market is expected to grow, and Wolfspeed has positioned itself as a leader. The real question is whether it can execute through this rough patch, manage its expansion plans wisely, and prove to investors that it has the financial runway to turn things around. Today's move suggests there's still faith in the company, but the road ahead isn't going to be easy. With big spending still needed for its capacity build-out and competition heating up, Wolfspeed has to deliver on execution. For now, the bounce gives a bit of relief, but whether it's the start of a real recovery or just a dead cat bounce remains to be seen. Our review on QSG QuantaSing Group Ltd, a key player in China's adult learning market, had a strong run today, climbing 17%. This kind of move suggests investors are starting to see more potential in the company's approach to online education, especially as the demand for lifelong learning continues to grow in China. QuantaSing has built its business around offering accessible, practical courses for adult learners, everything from financial literacy and data analytics to more creative pursuits like traditional Chinese painting. With education shifting more into the digital space, the company is well positioned to capitalize on this trend. And given China's increasingly competitive job market, skill-building platforms like QuantaSing could see a steady rise in demand. Today's pop in the stock could be fueled by broader market sentiment, sector momentum, or even internal business improvements that investors are taking notice of. The Chinese education sector has been a roller coaster in recent years, with regulatory uncertainty always a factor. So any sign of stability or positive traction can spark renewed interest. That said, one good day in the market doesn't tell the whole story. The real question is whether QuantaSing can sustain this momentum, expand its user base, and navigate the competitive and sometimes unpredictable online learning landscape in China. Still, today's move is a strong signal that investors are paying attention, and that's always a good starting point. Our review on WDH. Waterdrop Inc., a key player in China's insurance and healthcare services space, had a strong day in the market, climbing 14%. Investors seem to be taking a fresh look at the company, which has carved out a unique niche by blending insurance, medical crowdfunding, and mutual aid into a single platform. What makes Waterdrop interesting is its ability to connect people in need with financial support, whether through tailored health and life insurance plans or its crowdfunding platform that helps patients raise money for medical expenses. In a country where out-of-pocket healthcare costs can be a huge burden, this kind of model has real value. Today's stock surge could be a reaction to improving sentiment around the company's business model or optimism about its financial performance. Waterdrop has been working on streamlining its operations and improving profitability after an intense few years of regulatory shifts in China's fintech and insurance sectors. If the company is managing to scale its marketplace while keeping costs under control, that could explain why investors are warming up to it again. The big question is whether this momentum can hold. With rising healthcare costs and increasing digital adoption in insurance, Waterdrop has an opportunity to grow, but execution will be key. For now, today's rally is a sign that the market is paying attention, and that's always a step in the right direction. Our review on COOP. Mr. Cooper Group Incorporated just got a serious upgrade, and the market is loving it. Up 14% today after news broke that Rocket Companies is acquiring the mortgage servicer in a massive $9.4 billion all-stock deal. This move isn't just another merger. It's a game changer for the mortgage industry, putting nearly 1 in 6 U.S. home loans under Rocket's umbrella. For Mr. Cooper shareholders, the deal delivers a solid premium, $143.33 per share, plus a $2 per share dividend before closing. And for Rocket, it's a strategic power move. Mr. Cooper brings a massive loan servicing portfolio, adding nearly 7 million customers to Rocket's already dominant ecosystem. The scale here is staggering. Post-merger, Rocket will be servicing over $2.1 trillion in mortgages. That's the kind of scale that gives a company serious pricing power, operational efficiencies, and most importantly, data. The integration of Mr. Cooper's servicing platform with Rocket's AI-driven customer acquisition machine is expected to generate around $500 million in annual revenue and cost synergies, including $400 million in operational savings. More customers, more data, and lower costs. Rocket is betting big on technology to streamline homeownership, from loan origination to servicing. Regulators don't seem to be raising red flags, with analysts predicting no meaningful pushback despite Rocket's increasing dominance in the space. The deal is expected to close in Q4 2025, pending approvals, and when it does, Mr. Cooper CEO Jay Bray will take over as president and CEO of Rocket Mortgage. For now, the market is clearly seeing the upside. Mortgage rates may still be volatile, but scale is becoming the name of the game, and Rocket just secured itself a front-row seat in the industry's next chapter. Our review on ASPI. ASP Isotopes Inc. had a rough quarter, but you wouldn't know it by looking at today's stock performance, up 12% despite missing expectations. The company, which is focused on developing isotopes for healthcare, tech, and nuclear applications, reported a quarterly loss of 13 cents per share, wider than the expected 9 cents loss. Revenue also came in just shy of estimates at $1.19 million versus the forecasted $1.20 million. So why is the stock rallying? Well, sometimes it's not about what just happened, it's about what's coming next. Even with a sluggish quarter, analysts haven't revised their earnings estimates, and the stock still holds a solid buy rating. The median 12-month price target sits at $6.50, signaling optimism for ASP's long-term potential. Investors may also be focusing on the bigger picture. Demand for specialized isotopes is growing, especially in nuclear medicine and advanced fuels, and ASP Isotopes is positioning itself to capitalize on that trend. The company has had a tough quarter, with shares down 7.6% over the past few months. But today's pop suggests that investors see an opportunity here. Whether it's bargain hunting or confidence in the company's long-term vision, ASP Isotopes is getting a fresh wave of interest. Now, the question is whether it can deliver stronger results in the next earnings cycle. Our review on NVST, Navitas Semiconductor Corporation, a player in the power semiconductor world, saw a solid 12% jump in its stock today. This comes after a few solid developments in the market that investors are taking notice of. If you're unfamiliar, Navitas focuses on designing and marketing power semiconductors like gallium nitride (GaN), ICs, and silicon carbide (SiC) power devices, which are used in everything from mobile phone chargers to electric vehicles. So, what's behind this move today? Investors are likely responding to the continued strength in demand for its GaN and SiC products. These semiconductors are key components in fast charging technology, energy-efficient power systems, and electric vehicle infrastructure, all areas with growing demand. It's the type of tech that's only becoming more critical as the world shifts to greener energy solutions, faster charging capabilities, and more efficient power usage. With all eyes on renewable energy, data centers, and electric vehicles, Navitas is right at the heart of it, delivering components that make faster, cooler, and longer-lasting devices possible. It's a company positioned for growth, and today's jump reflects investor optimism about its prospects in these high-demand sectors. The stock's up, and for a company in this hot space, it makes sense why investors are buying in. If they keep riding this momentum, it's looking like Navitas could be on a pretty exciting path ahead. Our review on VRRM, Verra Mobility Corporation, known for its smart mobility solutions across North America, Europe, Australia, and Canada, is seeing some solid action in its stock today, up 11%. This is a big deal, especially for a company that plays such a critical role in the transportation infrastructure space. If you're not familiar, Verra's got 3 key segments: commercial services, government solutions, and parking solutions. They're basically at the heart of everything from toll management and parking to automated traffic cameras that keep cities safer. They've got a massive footprint in rental car and fleet management services, plus they're a go-to for local governments, offering automated safety solutions like red light and speed cameras. So, what's behind the 11% pop today? Investors are likely reacting to the continued need for these smart mobility solutions. With cities pushing for more efficient and safer transportation systems, Verra's offering is more essential than ever. Not to mention, their presence in multiple global markets positions them well as demand for traffic and safety technology grows. As smart mobility becomes an increasingly crucial part of how we navigate urban spaces, Verra seems well poised to take advantage of this ongoing trend. This jump reflects confidence that the company is tapping into some major growth opportunities in a very hot sector. With their technology streamlining everything from toll collection to road safety, the future looks pretty promising. Please subscribe, give the video a like, and watch more from our playlist. Thanks!